Okay, guys, you're about to start a seminar, just seconds away. The analyst, our head analyst, Shlomo Cooper, is going to be the person who will lead you through the seminar. Scott will say a few words too, just before we start. The seminar is all about making 160% in just a few minutes, really, in one play. And this is something that Shlomo promised. And if Shlomo promises, I think he's going to deliver. Now, let me say this. We had some huge winner in the IPOs in the last year. Alibaba is promised to be, just 2 weeks away, is promised to be probably the world's biggest IPO. And things are going to be very, very interesting once this IPO goes out. So if Shlomo says you can make 160% in one day in Alibaba, he has to explain to you today why. He's usually right, so listen very carefully. I just want to mention that if you're interested to know more about how to trade IPOs, then just go onto our YouTube channel. There's some very long lessons about how to trade IPOs, all of them made by Shlomo. It's his baby. He does that much better than I do. And it is going to be a very interesting seminar. It is also going to be recorded, so if you get to miss it, if you need to leave early or something, then it is going to be on our YouTube channel. So just have fun and learn, and hopefully we're going to get days like we just had more and more. I mean, this was a perfect day, and hopefully it's going to continue. So the microphone is all yours, Scott, and see you tomorrow, guys.
Okay, Meir, thank you so much. I really appreciate it. And we've had an incredible day today here, and the pickup of the volume, as we've seen coming out of August and now into September, has really helped the trading, and we've had a great day so far. So I wanted to kick things off before I turn it over to Shlomo, just to talk a little bit about what we're doing with the trading room and the prop trading team. For anybody that's new to the room, for all of our traders that have been with us and are on the prop trading team, these are some items that we've gone over before, but I wanted to start on the left side of the chart here and just review a couple of things with everybody. So what do we offer at TradeNet, and why would you consider TradeNet to come over and be part of our team? Well, as you've witnessed this morning, and if you haven't been in the room, we do have real-time trading. We're very transparent in the room. We trade in real time. We post all of our trades, and we lead by showing and trading in real time. Both myself, Meir, Shlomo, and the rest of our traders in here trade with real money, and that's how we do it every day. The other feature that I think everybody really enjoys here is that we have real-time audio. So when you're hearing the voices and we're explaining the trades, not only the reasons why to get into the trade, but also why to get out of the trade, how you get into it, and what the entry and exit points are. That's all in real-time audio. We explain those. We explain why to get into the trade, why to get out, when to get in, when to get out, and we post the price of what we're doing. Along with that, as you can see each day, we have live charting. So when we're talking about a specific chart, as we talked about today, BP, we have the chart live streaming in the room. You can follow along. You see our entry and exit points as we explain them. And then as you're having today, a specific learning presentation, or as we refer to them as webinars, we try to do these a few times a month to get everybody focused on what's coming up, some important learning, some important teaching that we can bring to you from myself, from Shlomo, from Meir, and some of the best traders around the world. And these, again, it's not just about the analysts making trades. It's real-time trades from traders that are in the room that do this day in and day out. And we are not privy to just trading our own trades each day. We take input from other traders in the room, and we use that input to become profitable each and every day. And one of the greatest things about the room, as many of you have seen in other rooms, is it's all about transparency. It's the transparency of the trades. It's the transparency of the charts. It's the transparency of the entry. It's the transparency of the P&L. And all of those things go hand in hand with giving you one of the greatest trading room experiences around. Now I'd like to just shift gears and follow up on the prop trading team. What is the prop trading team? Well, simply and straightforward, the prop trading team gives you, the trader, the ability to trade our capital, trade the TradeNet capital. We give you margin up to 20 to 1. For example, if you were to join our team with a $10,000 trading deposit, we would offer you $200,000 of intraday trading margin for the day. So now, prop versus broker margin here in the United States, the most that you're going to get for a non-proprietary trading broker is 4 to 1 margin. So if you put that same $10,000 of trading capital into a brokerage account here in the States, you'd be trading with $40,000 during the day. But becoming part of the proprietary trading team, which I lead, you're up to $200,000 of trading capital, and that's for a $10,000 investment. So we also offer live and self-trading. It's not just giving your money to TradeNet and us letting you go. We have a live and self-training that you can take online that allows you to do it at your own pace, and then our live mentorship, which I'll go into here at the end and describe that. We also transition from a demo platform to a live trading platform, which allows you, when you're training yourself and going through the training modules, you can then trade with a demo account in real time to have the experience of being able to trade on a live trading account as you progress with your training and with your demo account. We utilize the Colmex Pro platform. It's an outstanding platform that allows you to trade CFDs or contracts for differences that you cannot trade in the United States. And the CFDs allow you to get in and out. It's extremely quick and responsive platform, and just worlds ahead of just trading a bid or ask on a stock or a equity position. The trading room is included, so instead of paying on a monthly rate for the trading room, we include that with our prop trading team. And monthly profit pay. So for instance, we offer 100% payout. If you come into the room with $10,000 of capital, we pay you 100% up to that $10,000. So if you're making, if the next month you make 10 grand, we pay you that $10,000 back, and then after that, it's a 80-20 split, 80% to the trader and 20% to TradeNet. And as you guys have been asking for, we are coming out, we have developed and are coming out with a mentoring program. This is a live mentoring program that will be hosted by Meir, by Shlomo, and myself, which gives you live, hands-on mentoring that you don't have to take online. It's not a self-study course. It is live. You're asking the questions live. You're getting that one-on-one mentoring that so many of you have been asking about. It's really the hand-holding to bridge the gap from beginning trader or intermediate trader towards that advanced and professional level. And it's something that we truly believe in. We truly want to train our traders to become the best out there. So that kind of wraps things up on my portion here, and I'm going to hand it over to Shlomo. If there's any questions real quick, we can take those to move forward. And then Shlomo's got a great Alibaba IPO webinar here. And as you know, we have specific ways that we play IPOs here in the trading room. And I think that Shlomo is going to move forward and expand on that and talk specifically about Alibaba. So Shlomo, I'm going to hand it over to you, and we're going to move forward.
All right. Thank you, Scott, so much for your words, for your introduction, also to Meir. And before we start, it's great being here with you in our weekly webinar. And let's just make a really quick sound check. Am I loud and clear, or am I muffled? So I just adjust my microphone. Sounds good, sounds good. All right, if you can give me more feedback on my sound, and then we can go forward. All right, sound good? That's great. Okay, so we are going to talk today about Alibaba, but not exactly on Alibaba. As you can read in the title, it's about Alibaba's backdoor play. And as you know, Chinese internet giant Alibaba recently filed papers for what will surely be the biggest IPO in history, virtually guaranteeing millionaire status to a swath of insiders, high net worth investors and bankers. But on this particular deal, a lot of regular folks will get rich too. That's why I asked Meir and Scott, I want to talk with you about it today. You see, under normal circumstances, mega IPO profits are reserved for the ultra rich. But the Alibaba IPO, a potential $20 billion deal, comes with a little known exception. And for you, it could be a hugely profitable one. My newest research has led me to a backdoor way for you and for me to make a fortune on the Alibaba deal right now, long before the shares actually go public. Your gains, in fact, could exceed those of the IPO's original investors. All you have to do is make one simple move today, and the sooner the better. As you can see, we already have the SEC has already set the date to the 16th of September, so just circle it in your diaries. And the Alibaba is going to be traded under the symbol BABA. You see, I've discovered another way to take a significant stake in what will be history's biggest IPO. There is an American company that was smart enough to build up a huge position in Alibaba over the years, and now that the Chinese firm has decided to go public, this savvy American firm is about to cash out, and to cash out big time. It could actually reap a $12 billion windfall on that deal, a payout that would more than double this company's cash flow in one day. For little guys like us, this could be one of the biggest slam dunks of the year. I'm talking about an estimated 160%, guys, pop in the quick action, with the potential to rise as high as 400% if you are patient and willing to ride the upside, and it's all up to you. I'm anticipating the initial gains to come fast, springing directly from the massive Alibaba shockwave effect that's already spreading through global markets and will most likely end minutes after the IPO goes live several weeks from now. So we don't have much time. Let's get started. My name is Shlomo Cooper, if you don't familiar with me, and I've spent 15 years uncovering the inner workings of the financial markets and have tracked, researched, and written about some of the most groundbreaking IPOs in history. From Google's DBAT in 2004, it was a 1000% gainer, and by the way, I just found in my computer the first day of a Google IPO on 5 minutes chart. This is taken from eSignal. It started on the 19th of August 2004, so it's actually to dig into the archive to find something like that. And you know, this is just this stock, this capture, this image. It's like a treasury. Started at $100, and you can see the action here. But it's not just with Google. We can mention, for example, Twitter that soared 63% in its first 6 weeks last November, to some lesser known IPOs like Baidu. This is the Chinese internet stock that posted a record 354% on its first day of trading. And Potbelly, the food chain, who went public on October the 3rd, 2013, last year, and watched its stock soar to a high of $30.77 on October the 4th. That was good for a one-day jump of 120%. These are all great gains, but if you are not one of those high net worth VIP investors, or an insider, or someone with a good body at an investment bank, then you are basically shut out. And that is shame. That's why I've been on this mission. I'm constantly looking for secret ways to replicate the big insider gains using my insights, my experience, my knowledge of the markets to find highly profitable back route plays for my traders and for my investors. And the Alibaba deal fits here perfectly. Actually, the last time I saw an IPO this big was Visa's announcement in 2008, and I knew Visa would be a Goliath play right from the start, and I showed them exactly how to play it. To date, Visa is up 230%, pretty good for a huge cap financial services stock, don't you think so? But a deal of Alibaba's magnitude could easily cast a shadow even over Visa's. If the company's projection materialize, Alibaba's market cap would go as high as $245 billion overnight. That means this one Chinese company that barely anyone heard of just a few weeks ago will be bigger than Facebook, will be bigger than Amazon, will be bigger than eBay in an instant. That's why just the mere announcement of it has been sending enormous shockwaves throughout the financial markets. But let me make it this clear. This single biggest shockwave is landing directly on this backdoor play. I want to tell you about it today, and I want to share it with you. It's a company you should buy before the IPO goes live if you want to see fast gains of 160% or even better. In a recent 250-page filing with US securities regulators, Alibaba Group Holding, which is going to be traded under the symbol of BABA, BABA. This is China's #1 e-commerce player. It filed for what could be the biggest initial public stock offering, as we call it, IPO, in the professional EGA. It's going to be an historic IPO. The Hong Kong-based company didn't say how much it intends to raise in this deal, but one report says Alibaba wants to raise between $15 billion and $20 billion, selling a 12% stake in the company to make that happen. A deal of that size would dwarf the previous IPO kings, the $18 billion 2008 offering of Visa, and the symbol of Visa in the New York Stock Exchange is V, and the $16 billion IPO of Facebook and it's traded under the symbol of FB, also in the New York Stock Exchange. An offering of this size would give Alibaba a $168 billion market cap, making it smaller than Apple, smaller than Google, but larger than Facebook, than Amazon.com and eBay instantly. That's not an unwarranted number. Alibaba is among the top 3 internet operations in China, the world's second largest economy. According to its feeling, the company pulled in $5.6 billion in revenue and $1.4 billion in profit last year. Gross sales from its 3 largest sites, Taobao, this is similar to Amazon, Tmall, which is similar to eBay, and Juashuan, and sorry for my Chinese, but hopefully I'm saying it correctly, Juashuan, this is the site for group buying. They all totaled $248 billion, and nearly 20% of its business come from mobile devices, which means it oversees about 76% of China's mobile e-commerce. The company claims 231 million active buyers and 8 million active sellers across all its sites, and it's growing at a rapid clip. Revenue spiked, for example, 72% only last year, according to the securities filing. The post-IPO market value estimates for Alibaba vary widely. For example, in a recent interview on CNBC, Aswath Damodaran, a finance professor at New York University, valued the company at $143 billion, or about $60 per share. And we've seen even bigger projected valuation for Alibaba. After the company delivered better than expected results recently, Bernstein analyst Carlos Kirchner slapped a valuation forecast of $245 billion on Alibaba. This is equivalent, just to understand, for 10 Tesla motors strung together. So this is absolutely amazing. Although the valuation estimates cover the cover is large, they all offer consistent message. And the message is that the looming IPO is shaping up as a Godzilla-sized deal, one that's befitting of a true market-leading heavyweight like Alibaba. And the waves the IPO creates will have plenty of ripple effects, and to understand just how big this deal really is, just take a look right now on the presentation and check out this graphic, and just look how Alibaba is standing among all the others biggest IPOs. We can draw one other conclusion from this multi-billion dollars valuation estimates for Alibaba. This IPO is going to put a real charge into a lot of investor portfolios. But there's a problem. See, unless you are an ultra high net worth investor or have great connections with the investment banking crowd up in New York, or more likely both, chances are that you won't be able to get a piece of this very lucrative IPO deal. So today we are going to remove that obstacle. Today we are going to remove this obstacle, and in fact we are going to give you one play that that has a potential to send you gains that even exceed those of the IPO. So let's get started with the biggest one, and the biggest opportunity for you to make a fast 160% starting today. A moment ago, I told you to expect some major ripple effects from the Alibaba IPO. I've already identified the single biggest one, and I also zeroed in on the best backdoor way to profit from it. You see, I believe Alibaba will use the IPO proceeds to buy out Yahoo. So I'm telling my folks to buy Yahoo now. This IPO, when it hits, will give Alibaba an enormous cash war chest as well as tremendous leverage in global markets. It's only logical that the company goes hunting for acquisitions that boost customer penetration and revenue at the same time. And I just have to believe that Alibaba's to-do list includes the line item, take out Yahoo. It just makes too much sense. But even if the deal doesn't materialize, investors can benefit just by owning Yahoo. You see, Yahoo owns 24% of Alibaba. Pre-IPO, this is clearly the best way to get a slice of the Chinese internet giant before it debats. Like a state secret that's not really a secret, the Alibaba IPO figures to be one of the biggest IPOs in recent years, and perhaps even one of the largest ever. So buying Yahoo is kind of a backdoor way to play this Mondo stock offering. To underscore just how much I believe in this recommendation, know that I've already bought shares of Yahoo at prices below $36 each. In fact, at anything less than that price, it's actually a bargain. And you know, when the S&P 500 is actually trading above 2,000 points level, it's not so easy to find bargains in this expensive market. Right now, Yahoo is trading over $38, but even at the area, at the vicinity of $38 or even $39, it's still not expensive to get on the wagon. Yahoo was smart enough to invest $1 billion in Alibaba in 2005 and now owns 24% of the Chinese company. Actually, that makes Yahoo a backdoor way to play the Alibaba IPO. Plus, the stock offering is going to give the American company a major cash infusion while bolstering its market value in a big way. Analysts estimate that the Alibaba effect on Yahoo is between $29 and $30 a share on Yahoo share. And I actually believe those estimates are pretty low. Between Yahoo Japan, which still outranks Google in terms of local search there, and Alibaba itself, the value is much higher. My calculations tell me that $50 may sound much more likely. In other words, I'm saying that, or I'm claiming that, if you add in the Alibaba effect Yahoo's true value in the long run is more like $86 a piece, $86 a share, about 160% above where the stock is trading right now. It will take a bit for Yahoo to achieve this full fair value unless there is a buyout by Alibaba, which is a lot more likely than the experts would have us believe right now in Wall Street. Yahoo has a lot of things that Alibaba can use. There is access to the US market. There is a pre-existing regulatory structure and regulatory relationships here, which has a lot of value in itself. And there are businesses and brands that can be better utilized. But Yahoo's most valuable asset in the roster of US users and that the company has right now. You see, in the aftermath of the Alibaba IPO, the battle for users and subscribers is likely to escalate. You see, US and Chinese technology companies have focused so far on global domination, but have kind of ignored each other on a company-to-company basis. But the Alibaba IPO could signal a shift in that item, and that could ignite a global battle for users. I think, actually, Alibaba is a great company. I was actually surprised by how much money the company makes. It's a phenomenal money maker, but I think its biggest problem is that it's already 80% of the market in big segments. The growth has to come from the overall market growing, and that kind of puts a cap on the how much Alibaba can grow from now. The so-called organic market growth is one way for Alibaba to grow. Creating new products, services, and businesses is another one. And entering new markets is a third. Acquiring new names is a fourth. There is a move Alibaba can make that would achieve all of those objectives, and this is an acquisition. And Yahoo is the perfect target for Alibaba to acquire. Using the US company to grab a big group of American users in one fell swoop makes one heck of a lot of sense. The way I see it, Yahoo is clearly not worth much on its own. Yahoo's CEO, Meir, can't seem to get traction despite some heavy-duty talent recruitments and attempts to develop original content a la Netflix and HBO. Yahoo's share of digital ad media has fallen to under 6%. Just to understand the figures, Yahoo hasn't got a meaningful presence in mobile markets, where advertising was up 81%, and that's why the company is cheaper on a valuation basis than its individual parts might warrant. And you're going to love the next slide, and this is Meir in front of your eyes. Yes, so this is the Yahoo CEO, and as part of the IPO, Yahoo is selling 208 million shares, or about 40% of its Alibaba stake, a move that could generate a windfall of more than $10 billion. That would more than double Yahoo's cash war chest. I saw recently in businessweek.com a report that Meir is nearly 2 years into a turnaround effort that's failed to produce much sales or profit growth. And that means that she must be very careful as she decides how to deploy the capital. She could return cash to shareholders through a buyback or dividend, or focus on expansion through acquisitions. Choosing wisely is critical for her, as the payout offers Meir her best shots yet at narrowing the ever-widening gap between Yahoo and web rivals Google and Facebook. The Alibaba cash gives Yahoo's Meir the firepower to go buy companies, and what she does with the cash will define how effective of a manager she is. Yahoo's current business lacks much value. An evaluation conducted by SunTrust Robinson Humphrey analyst Robert Peck concluded that the Alibaba stake is actually the most valuable part of the company. In fact, it accounts for more than half the value of Yahoo's share price. Less than $7 of the company's recent share price is actually tied to Yahoo's main business. This is something staggering. Clearly, the Alibaba stock offering is a pivot point that will set some changes in motion. If I were Alibaba chairman Jack Ma, I would use the IPO to take Yahoo out of the picture. Then I would immediately take applicable IP, which is intellectual property, to my Chinese customer base to execute a powerful end run around my Chinese competitors like Tencent and Baidu. Shortly thereafter, I would flood the pipe in the other direction using Yahoo's know-how about the well-developed US e-commerce market to jumpstart changes in China. Doing this will let Alibaba leapfrog its home market rivals, giving the Yahoo acquisition a value that far exceeds its measurable asset value. Alibaba is already doing this in the intellectual property arena, taking US technology and applying it to the Chinese market. Alibaba has already purchased more than 100 US patents in everything from payment processing to data search. It owns key stakes in companies like Tangumi, which is a messaging service, and Lyft, which is a ride-sharing program now in some 60-odd cities. The China retail e-commerce market is developing along new lines. Most of the Chinese shops have actually no physical selling model. By contrast, the US online experience is built around online retailing that is an outgrowth of brick and mortar retailers. Alibaba merchants can sell more in a single day, guys, than all the e-commerce sites in the United States altogether, and the scale is just staggering. Alibaba accounts for 70% of China's package deliveries, and is worth nearly 2% of China's GDP all by itself. This is amazing figures. Walmart, by comparison, the number one retailer in the United States, is only 0.03% in the States. And while the entire US population, men, women and children all together totals 330 million, only the online population in China will hit 850 million by the end of this year. Alibaba is already a heavyweight in that kingdom, in the online kingdom. Two Alibaba properties, Taobao and Tmall.com, account for more than 90% of Chinese consumer-to-consumer online shopping and 51% of business-to-consumer retail sales, according to Observer Solutions. As Chinese consumers increasingly flood global markets, they will continue to change things and drive revenue in ways that Westerners cannot envision. They will make sales happen that would otherwise not, and in the process stimulate consumption that doesn't yet exist. They actually they are going to actually make a market that today it just not exist. This is not out of question given that the Chinese government forecasts online sales of $2.9 trillion by year end, an increase of 80% year over year. What figures we are talking about? Wow. By adding in the Yahoo technology and US market know-how, Alibaba can amp up its China business, and it will also get a nice beachhead in the well-developed and lucrative US market. That's why an Alibaba buyout of Yahoo makes, for me, so much sense. Let's look at the investment case. If you think about the bigger picture here, all of this makes sense. In fact, it's got all the makings of a classic takeover. Indeed, the buyout I predict makes so much sense because, first, Yahoo has done the hard work and spent the resources to do it. Alibaba will have very deep pockets and could easily leverage its experience without a lot of effort to build what could easily be bought cheaper. Also, Alibaba is clearly on the path to global leadership, long ignored by Google, by Amazon, by Facebook, for example. It would use Yahoo to leapfrog the competition. If valuation on the IPO are what we are predicting, and we are in a minute going to do some calculation together, the company could buy 10 Yahoos and still have a change. Following the IPO, both Yahoo and Alibaba will be flush with cash that can be used to immediately, cheaply, and efficiently clean up their balance sheets. Not that they are messy to date, but the ownership structures could be simplified. A Yahoo acquisition would build on geographic diversify. That's an already proven strength on both companies. Okay, and you know, in a classic play, buying Yahoo could create higher margins for both companies once the China-based business is factored into Yahoo's model, especially since Yahoo's model by itself no longer has the reach it needs to work. At the end of the day, this is a truly speculative investment for sure. There is no sureness that a buyout will materialize, and there is a chance that Meir will squander the windfall that comes to Yahoo thanks to the sale of 40% of its Alibaba stake. But the reality is that the pressure is on Meir, and the post-IPO Yahoo will have the chance to enhance shareholder value in a way that it can't right now. And that means that even without a buyout, Yahoo's shares represent an intriguing profit play. If anything else, Yahoo is a backdoor way to play the Alibaba IPO. There are many reasons to buy it. Normally, an IPO situation means you pay more for less, but in this case, it's the reverse. In fact, I think we are paying less and clearly have the potential to get a whole lot more. Let's run some numbers together. Let's assume our 100, and I'll just take the laser spots, okay? Let's assume that our $168 billion market value estimate for Alibaba, for Baba. And let's assume that Yahoo sells a 10% stake for $16.8 billion, meaning it's going to keep another 14% stake. If Alibaba doubles in value on the first day of trading, which is not out of question, that remaining stake would be worth $47 billion. Add in the $16.8 billion and you are looking at an investment that's worth nearly $64 billion. Pick, the SunTrust Robinson Humphrey analyst, said that Yahoo's other businesses are worth $7 a share. Yahoo has 1.01 billion shares outstanding, meaning those other businesses are worth $7.07 billion. And we are using these numbers just to give an approximate value picture of a post-IPO Yahoo. If we take the Alibaba stake value of $64 billion and add back the Yahoo business valuation of $7.07 billion, we get a post-IPO valuation of $71 billion, which is $71 billion, which is post-IPO stake value of $64 billion plus Yahoo business value of $7.1 billion, which is a total post-IPO value of $71 billion. The current market value of Yahoo, of that company, is about $35 billion, meaning our estimated post-deal value for Yahoo using this model is more than 100% or 103% higher than the company's current market cap. But there is a but. Piper Jaffray's Monster, as part of his aforementioned upgrade report on Yahoo, argues that the $168 billion value estimate is actually low. Way low. According to Monster's analysis, if you value Alibaba on the same market multiple basis as its peer companies, Alibaba's market valuation would approach $214 billion. The peer companies he's looking at are US players like Amazon, like eBay, and like China-based e-commerce players such as Tencent Holding and earlier private briefing recommendation Baidu, which is the Chinese search engine. According to Monster, once the company goes public, it will move toward this valuation. In addition, assessing the value of the Alibaba stake held by Yahoo using what's known as a sum of the parts valuation model boosts his estimate from a prior $22.3 billion all the way to $28.7 billion. Piper Jaffray isn't the only institutional player that's getting more excited about Alibaba. Actually, Morningstar, which is a very popular financial researcher in the United States, valued the company at $220 billion and accepts it to go up to $226 billion. So let's use the Piper Jaffray and Morningstar estimates to make another estimate of Yahoo's potential value. Let's assume a $22 billion market value estimate for Alibaba, reasonable midpoint between Monster's $214 billion estimate and Morningstar's high water estimate of $226 billion. And we will use the same approach we used earlier. Remember, Yahoo owns 24% of Alibaba, and it said it plans to sell 40% of its holding, which equal to about a 10% stake in Alibaba after the IPO. So let's assume that Yahoo sells that 10% stake for $22 billion like we calculated earlier, meaning it keeps the 14% stake. If Alibaba doubles in value on the first day of trading, that remaining stake, the 14% stake, would be worth $62 billion. Add in the $22 billion and you are looking at an investment that's worth nearly $84 billion. Again, remember that Peck, the SunTrust Robinson Humphrey analyst, recently estimated that Yahoo's other businesses are worth $7 a share, that's all. Yahoo has 1.01 billion shares outstanding, meaning those other businesses are worth $7.07 billion. And again, we are using these numbers just to give an approximate value picture of a post-IPO Yahoo. If we take the Alibaba stake value of $84 billion and add back the Yahoo business valuation of $7.07 billion, we get a post-IPO valuation of $91 billion, and this line is the calculation post-IPO stake value of $84 billion plus Yahoo business value of $7.1 billion, which equivalent to total post-IPO value of $91 billion. The current market value of the company is about $35 billion of Yahoo, meaning our estimated post-deal value of Yahoo is 160% higher than the company's current market cap. With either of these two projections, we are looking at a hefty potential gain in Yahoo's overall value as a company. This is your biggest backdoor opportunity on the Alibaba IPO. Rest assured, we are going to follow the IPO itself when it's going to debate on the 16th of September here in the trading room. We have a great technique trading IPOs on their first day. If you haven't learned about that, I urgently recommend you to go online to our YouTube channel and just take this video about how to trade IPO. I think it's called IPO Bonds for Success, and then there we are going over what is an IPO or the procedures of a new company going public, and how to day trade an IPO on the first day. So be sure you are going over this video. Stay tuned and make sure you are part of this great training room to get more updates as the future shows itself. Thank you guys very much for being here with me for the last 1 hour. It was a pleasure for me. If you have any questions, I'm still here for the next couple of minutes, and you are more than welcome to ask me anything about it. Thank you all for participating in this webinar, and as always, my email, and you can always write me, is shlomo@tradenet.co.uk. You can contact me in this email. Goodbye all.
Shlomo, I just want to say a big thank you. That was really, really good. And I know that a lot of the traders here in the room really appreciate what you're doing every day. And looking forward to this IPO as we've done in the past with others and the way that we plan specifically in the room. So traders, let's open it up to any questions for Shlomo and then any questions for myself, because I'll be here for the remainder of the day, trading and taking you through the afternoon session as well. So Shlomo will be with us for just a little while longer, so let's get Shlomo's specific questions out there right now and kind of go from there.
Yeah, so I see here a couple of questions. What is the date for the IPO? So Ken and all the others, the IPO here, you can see it also on the slide, the 16th of September, about 2 weeks from now, 2 weeks exactly from now, and it's going to go under the symbol BABA, BABA. All right, another question. Do you know a good broker who lets me purchase US stocks as I'm based in the UK? So I guess the best way is just, email us this question and we will try to help you on that. Cindy is asking, Shlomo, how do you find IPOs? Any website? Yeah, so actually I'm using for that a couple of websites, and again, just go to our YouTube channel, because there is a great webinar we had in the past about how to trade IPOs, and then you are going to get really all the wheels working about what is an IPO, how to trade an IPO, how to find IPOs. But I just give you 2 great sites that I'm using in my trading. The first one is IPOscoop.com, and actually you get there all kind of statistics, like what is all the statistics for the last 100 IPOs, and the last 100 IPOs actually gives you a very good understanding why I say IPOs born for success. From the last 100 IPOs, 72 went up, 28 of them went down, and we are talking about 1.5 month on average as a public company. Now, on average, they went up during this period 30%. 30% up on average for the last 100 IPOs, taking into consideration the 28 of them went down. That means that the 72 that went up made much larger gains than 30%. This is why we are so thrilled about trading and investing in IPOs. And actually, in the webinar I'm talking about IPO born for success, we showed you how a trader like you, like me, can actually double his portfolio, an IPO portfolio, within couple of months. So no, there is no any other any other niche, any other arena in Wall Street that for me is more exciting than the IPO arena. Jamiel is asking, Shlomo, will you be swing trade, Baba? Yeah, so Jamiel, I think I also showed here how we are swing trading, not just day trading, also swing trading IPOs, and I'm just talking about that. And if everything is applicable, if everything is in line, I'm going to swing trade Baba for sure. yeah, it's going to be the most interesting IPO in 2014. I just right now recall what we made on the previous popular IPO in 2014. That was GoPro. GoPro went public not far ago, about 1 month ago, and we also day traded it, and we also swing traded it, and it was a great. We made a great deal there. Okay, so Farhad also mentioned the internet site on the Nasdaq for getting the calendar for IPOs, and I'm using also this calendar, so thank you for that. Alright, Karen is mentioning IPOdesktop.com. Thank you for sharing. Raul is asking, just to clarify, the 160% profit potential in Yahoo is simply as a result of holding 24% of Baba and the potential for exactly. Raul, you got it right. John is asking, buying calls on Yahoo. So yeah, you can also use these instruments, buying calls on Yahoo. I prefer to put to take stocks. On Yahoo, because you know, if Alibaba is going to buy out Yahoo, I prefer to have the stocks. Nelson is asking, how many points do you see Alibaba gaining on its IPO day? So Nelson, it's hard to say. Very much depends on what will be the price of Alibaba in the IPO before start trading. So it much depends on that. But you know, even we traded the Twitter last year, and it started 50% up, or GoPro started 50% up, and they still had room to go up from there. So even if we are going to see Alibaba started with a 50% leap, I'm still just going to be very close to the technique, to the IPO technique for day trading, to get the decision if to ride on this day trading. Shlomo, how long would you be holding Yahoo after the Baba IPO? Weeks, months, years? Thanks, Shlomo. All right, so Sandeep, I don't really know. For years, surely not. Between weeks to months, and that depends on the developments. And of course, you know, I think most of the money we are going to make in the weeks leading to the IPO and in the days after the IPO depends on what Alibaba is going to do in the first days as an IPO. Okay. Karen is asking, do you know any way of acquiring IPO stocks outside of the open market before it opens like the institutions do? So Karen, you know, one way is the backdoor opportunity, as I showed you right now in this webinar, actually buying a company that is already holding shares of the IPO. Otherwise, you just need to be a VIP millionaire status investor in one of the underwriter firms that is going to take this Alibaba publicly, and to hope they are going to give you some stocks. Otherwise, you can't get any stocks as a regular investor. All right, guys, thank you very much. Scott, the microphone is yours.
Hey, Shlomo, thank you so much. Appreciate that. Appreciate all the great questions that everybody's been asking, and that's why we have Shlomo here. It's just it's been a great presentation. Want to take advantage of the Alibaba. I like the I don't know who it was here that was talking about puts and calls, but that's another strategy that can be used to increase your possible profit on the IPO today, on the IPO day. So it's going to be great. It's the 16th. It's coming up in what is it? 12 days, a couple weeks. and it should be fantastic. So let's take a look at a couple of stocks here. Patty had pointed out this GoPro trade.